What's up, guys? Welcome back to Road to the 2 Comic Club, and Justin here. I was just about to go get some cereal, and they were doing like a little summary of what happened the past couple days. I think this was a clip from yesterday, but check it out. These are the guys that had percentages gains from the Tuesday low. And look at that. Best Buy, Netflix, Home Depot, Twitter, and Nvidia. We have all of those, luckily. So hopefully we made some money since then, but the Dow is down currently, 231 points. And I forgot to mention this yesterday. I don't know if I did or not, but a lot of people, Mr. Joseph, shout out to him, he mentioned this. Other people mentioned this. We're looking for a consolidation right now, which means after that big dip on Tuesday, it came up Wednesday, and then it went down Thursday. Or no, today's Thursday. Was it Monday? Okay, so Monday went down, and then Tuesday it went up. And then, yeah, Tuesday it went up, Wednesday went down. So we're looking for it to go up a little bit today, or if it goes down just a little bit, because we want it to kind of calm down and like kind of bottom out, known as consolidation, where it just kind of like sits at a certain level. Usually after that, it starts to go back up. So that's what we're looking for today. Right now it's going down a little bit more, but it did go up 500 points on Tuesday, so it only went down like 19 points Wednesday, so it could still go down a little bit today, and it's still fine. We just don't want it to go down huge. That would be really bad. But if it goes down like 230 points even, if it stays like that today, and then it goes up a little bit tomorrow, that's perfect. That's the exact scenario that we want. And so we're just gonna keep an eye on that. I'm gonna have some breakfast and do some editing. I just woke up because I was up late again last night. But yeah, so yeah, let's see what happens today. All right, so we lost a lot of money today. Again, it wasn't our worst day, but it was a pretty bad day. It was like probably up there, maybe our top 10. So we lost about 18 grand, I want to say, a little bit more than that. But you know, again, I think we're in the correction. We're in a big correction, so I think this is kind of normal. But what I'm gonna do is look at all of my strike prices and see which ones I'm the furthest away from hitting, and I'm going to really calculate whether it's possible I can hit that or not, because if not, I need to get out sooner than later, because with still you know, 10 months left until these expire, I still have some time, so I should still be able to get rid of any of these if I wanted to. So I need to do that, and that's what I'm going to do tomorrow. But in the meantime, let's just kind of talk about what happened. I sold my Twitter calls because I just figured I didn't expect them to come back up over the next few days. I just figured I could get my maximum profit now, and I could be wrong, but I really wasn't married to this stock anyways. I kind of just bought it because someone from the live stream, so shout out to whoever recommended Twitter. I'm drawing a blank. I don't know if one or two people recommended it, but one of you guys did. Shout out to you for recommending it. I totally took your advice, and I was like, hey, you seemed pretty confident Twitter was going to have good earnings, so I'll throw some money at it, and it worked out, so thank you so much. Kind of saved our butt a little bit, because we still got destroyed today. Also, I got Caterpillar. This is the same call that I got in for like $11 and I think $10.50 or something. So I got another one for even cheaper, so I saved about a couple $100 there by getting in a little bit cheaper. I still do like Caterpillar a lot. I think they're going to have an okay future going forward. And when I mean okay, I mean like I think they're going to go up quite a bit. And so a lot of people are recommending that, and I like them. So let's go to our thing. We have very few winners. Our puts were our biggest winners, so I'm really glad that I bought those. I wish I had bought more. Obviously, hindsight's 2020 though, but we do have like 19 grand now invested into puts, and so they helped us make $5,140 just between these two. And that helped, because had I not had these puts and had I had calls instead of these, I'd probably, instead of it being up 5 grand with these, I'd probably be down another 5 grand, which is a 10 grand swing right there. So I could have been down like 28 to 30 grand today had I not had puts for protection. And so I'm really glad that I did that. Yeah, it just kind of saved us a little bit, and it's been saving us on these bad days. So yeah, and we're in the, by the way, we're in the money now on both of these. So I bought these out of the money, and they're now in the money, which means the SPY is trading lower than this, and the QQQ is trading lower than that. And so I might be looking to sell them and buy some new ones if, you know, maybe get a better return. If I can buy lower ones and then they go in the money again, I can get a bigger return there. So that's what I'm thinking I'm gonna do with that. Zillow though, I think had good earnings, and I don't know if Albemarle reported or not, but And then my universal display call that I sold, it expires tomorrow. So this is a covered call. So if you're new to the channel and aren't familiar with a covered call, I own 100 shares of OLED. So I sold a call option to someone else, also known as writing a call, meaning I gave someone else a contract that gives them the option to buy 100 shares of universal display. So if they wanted to exercise that option, they could buy the 100 shares. And since I own the 100 shares, I'm covered in that position because I have the assets to sell to them if they wanted to exercise their option. However, this strike price is way higher than what OLED is trading at right now. I think OLED's in the 140s right now. So since it expires tomorrow, this contract that was worth $188 when I sold it to him, or her, whoever, is now worth $5. And so this will most likely expire worthless, which means I get to keep that $188. And once I'm able to, I can sell a new contract. And since volatility is high, they say it is better to be selling options at this time as opposed to buying them. That's kind of the general theory. So I'm trying to implement that into my strategy. I'm trying to learn, I'm trying to get better. Excuse me. So, you know, a little bit of money, it adds up over the long term. And so let's not talk about that too much because I'm rambling. So let's look at the losers, and there's a shit ton of them. So, but none of them lost more than $3,000. And so again, this is kind of like a correction type of thing. I really listening to every single analyst on TV, and I've been listening to a lot. No one is saying we're in a bear market. They're just saying we were due for this correction. Everyone wanted a 10% correction. We're now at like 11% or so. So this is what people were wanting. This is what people were expecting. So naturally, a lot of these stocks are going to go down. And so as long as we're not in a bear market, and this is the risk and the gamble I'm taking, I'm betting on the fact that we're not in a bear market and that these will come up again soon in the future. However, I was learning somewhere that someone posted a link in one of my videos recently. It was like 3 mistakes, most option. I forget who posted it, Dustin maybe, or I forget. I apologize, but if it was you, please comment below so I can give you a shout out in the next video. But he was basically mentioning like, basically the strategy that I'm doing is just really risky, and I knew that already, but I forget what he said. I forget what he's saying, but basically when the market's not like on a hot streak, even buying out of the money calls can be really risky or something like that. I think that's what I got from it. So I am going to be looking at, and I can't wait till TD Ameritrade merges finally, because I'm going to use Thinkorswim. I'm going to start using other strategies that takes advantage of higher volatility, or whenever the market's doing, I want to try to adopt better strategies that can help me make a good profit without risking so much, because I feel like I got a good head start with 2017. So knock on wood that we can kind of continue to grow, but if we can't grow as fast as 2017, I'm gonna have to look at different strategies. So anyways, sorry, I kind of forgot what the video said, but anyways, let's just go to the watch list. And we have a very small handful of things that went up. So the VIX, obviously, the volatility measure index, whatever, went up the most. Twitter though had a really good day, and then Hemp Americana had a good day. Another marijuana stock, Zillow, Riot Blockchain, and the Bitcoin one. I think this is another blockchain related company. Hemp, and then Watt, and then whatever this one is, MongoDB. I forgot. Oh, that's a database kind of company. They're pretty solid, actually. I've heard some good things about them. Anyways, here are all the companies that did bad. I mean, it's really not any surprise, so I'm just going to kind of zip through this. You want to pause the video at any point to look at them, but really, I think this is just to be expected because everything went down today. The one I'm most scared about, though, is Google, as you saw on the last page here. They're getting pretty low, and I'm a little worried about that because my call is now $300 higher than this. That's the one I'm going to be looking to sell first. But we'll see what happens. I still got maybe a few more weeks to make a decision. Unless Google keeps going down, then yeah, I'm going to sell that shit. Seriously, gotta get out of there. Okay. Oh, there's our boy Tesla at the bottom. Poor Tesla. Alright, so I'm gonna talk about this one article I saw. This guy just lost $10,000 trying to time the volatile market using his credit card. I'll post a link in the description, you could read that, but it's a valuable lesson. I think many of us already know this, but I mean, don't go to debt or borrow money to bet in the stock market. That's just very not wise to do that. But yeah, 24-year-old kid from Vancouver. He lost his entire savings trying to buy the dip, and apparently he used his credit card to fund that. I'll let you read that, and it kind of reminds me of this other article that I read that Jim Cramer might have also talked about in this article. But And I don't know if I've talked about it yet, but this one guy who lost like $3 million or something like that, and he basically had all of his money, and he was investing other people's money too, and he had all of the money into like 4 things, and they were all like VIX related types securities, like anti-VIX or like reverse VIX. So like he was betting on the low volatility, and of course he killed it in 2017, was making all this money, and then literally like overnight he just lost like $3 million or something like that. So again, don't put all your eggs in one basket. Even what I'm doing is similar, but it's not, because it's diversified under like 30 different companies. I don't have it in 4 things. And I'm investing in actual companies that have actual tangible items and have things that are actually helping society. I'm not just betting on volatility. That's kind of just like gambling. And you're almost like, I don't know, it's like, I don't like to bet on things to where like I'll make money when everyone else loses money. I don't like doing that. I know with put options, you're kind of doing that, but that's really more of a protection thing. I'm not just betting on some random volatility thing. I just think the whole concept of betting on volatility is just kind of weird to me. If the returns were good with stocks, I would just trade stocks, because I prefer to just trade stocks. I like the calmness of it. I like the lower risk of it. The only reason I'm doing options is I'm trying to make money quickly, but I personally don't prefer to do that. I don't like to do that. I just like to invest in companies. I like to be able to kind of relax and sit on them and not have to do anything. But with this volatility stuff, it's just, in my opinion, it's just crazy. And anyways, let's talk about the next article. Let's go to artificial intelligence. Actually, no, let's go to the Jim Cramer one. So he says, Jim Cramer blames a group of complete morons for blowing up the market. And this is kind of like what I was talking about. He said, and again, a lot of people don't like Cramer. I actually don't really know if I like him anymore, because I saw a video where he was kind of talking about how he manipulated the market. So I don't really take what he says to heart anymore, but he still has some good points, even if you don't like the guy. But he said, what bothers me is the people who have never looked at a stock and don't know how to analyze it are out in full force today. They've never been better about not knowing anything about the stocks. They got it all figured out. So this article, it says, as for the wild market action, the former hedge fund manager blamed a group of complete morons trading leveraged volatility products for blowing up everything. While he didn't call them out by name, he could have been referring to that guy on Reddit who lost $4 million playing the XIV, which is the reverse VIX, or maybe that former Target manager who was trying to recoup his losses, placing a $600,000 bet against volatility VIX. Wow, I did not know about that one. There's a link in this article to that article as well. But yeah, so you could look at that one. I kind of agree though with him, just because, again, when you have so much money going against volatility, it's gonna stir up a lot of crap, and then when it stirs a lot of crap up, it just messes everything else, and then people freak out, and then people start selling. It's just a domino effect that's not good. Let's go to some good news though. Artificial intelligence is a huge part of the game for NVIDIA now, so they reported really good earnings. They announced $2.9 billion in total revenue for its Q24. I don't know if that was a typo. 2018. With $9.71 billion in revenue over the entire year. The company reported $606 million of that revenue from hardware sold for use in data centers, meaning that just over 20% of NVIDIA's revenue now comes from AI-optimized data center hardware, up from 13% of its revenue this last year. So that's crazy. Their GPUs still make up the most of the revenue, generating $1.73 billion this past quarter. But I'll post a link, of course, to this article. You could read it too. NVIDIA is just doing very, very well. I love them. So let's just go to the next one. Activision Blizzard post better than expected revenues, in-line earnings. They posted non-GAAP earnings of 45 cents per share, including the GAAP deferrals. Adjusted earnings were 94 cents per share, and the company saw revenue figures of $2.043 billion, including GAAP deferrals. The revenue was $2.64 billion. Beating the Zacks consensus of $2.61 billion. So you can read this article, but they beat on some stuff, and they said they had 290 million MAUs. I don't know what that is. Oh, monthly average users, I think, down 1% quarter over quarter. Activision's Call of Duty WW2 was the top grossing console game of the year globally, so that was pretty exciting for them. And yeah, so they expect full-year non-GAAP earnings of $2.45 per share, or $2.50 when factoring in deferrals. Revenues are expected to be $7.35 billion, or an adjusted $7.45 billion. Their consensus estimates are currently calling for revenues of $7.44 billion. So I guess they have upbeat guidance or something like that, but you can see that article as well. But anyways, we're gonna leave it at that. So really exciting stuff with them. I'm hoping that they can help kind of spur a rally tomorrow with the stocks. I'm really crossing my fingers, knocking on wood, that they can do that. So if you like this video, please hit that like button and subscribe if you haven't already. And if you have any questions or comments, post in the comment section below. And I hope you guys are faring well, like at least as well as possible during this correction. Hopefully you guys are getting in some good stocks at good prices, and hopefully they'll come back up and we could all make some good profits. So hope you guys have a great day, and we will see you tomorrow.